How can I enable people that are not in the US to open a bank account in the US as easy as possible that is also stablecoin friendly? The demand for non-resident US dollar accounts is always going to be high. The key there is, how do I marry the two together?
That's Colton Seal, CEO and founder of RouteFusion, a global payments and accounts API built for global money movement. RouteFusion powers payment platforms, fintechs, and marketplaces to send and receive money in 140 currencies and instantly move this money all around the world from a single API. In this episode, we discuss how Colton's personal convictions around stablecoins has actually led him to steer his business to build more support for on-chain payments, which is unlocking core use cases like global payroll and payouts.
Season 1 of Stableminded is brought to you by Layer 1, powered by BVNK. BVNK has been at the forefront of stablecoin payments for years, and Layer 1 is their latest innovation, designed for businesses ready to harness the power of stablecoins. Layer 1 is self-custodial, global, and takes the hassle out of managing payments across multiple chains. It's the same technology BVNK uses to run their own operations that they've been developing in-house for years. Next season, we sit down with Johannes Kask, Managing Director of Layer 1, to talk more about it. So stay tuned until then.
All right, Colton, here we go. How we doing?
We're doing, bro. It's been a crazy week over here at RouteFusion. I really think the root is better.
I like RouteFusion as well. Well, let's just go with that. Here we go. Like, as of today, RouteFusion.
Yeah,
putting your flag in, as of this pod.
Well, we could also switch it to StableFuse.
Here we go. Okay, so give for those listening who do not know you quite yet, maybe an intro, full name, what you're working on at the company, and we can dive in from there.
Yeah, cool. So I am Colton Seal. I'm the CEO and co-founder of RouteFusion. We are a global payments and accounts infrastructure platform. So people use us to send real-time global payments all over the world, and they use us to open accounts in 17 different currencies around the world. And we recently just announced a cool USDC offering, stablecoin offering that we are very excited about, where you can fund your real-time global payments with USDC.
Awesome. And this is just for context, you've been building this business for how long? And give us the sort of high level of the moment you're in with building the company, and then I think recently it sounds like USDC and stablecoins is sort of hitting your radar. So would love to get some context as to where you've been before this moment.
Yeah. So it's funny. So we've been building the company for a while. We say 2018. And funny enough, when we first started RouteFusion back in the day, the first payment I think we ever sent was via some stablecoin rails, where we had USD come in, converted it to USDC, and then offloaded it via Bitso and used their local rails in Mexico to make the payout. We thought that back then that was, the future of global payments. We're like, oh yeah, we could just like piggyback on all these exchanges. It was a little too early. I'm happy that we pivoted off of that, because at that time, it just wasn't, it was not what it is today. The environment, it was still kind of sketchy that you were like doing stuff like that.
Totally. I mean, exchanges hated that, right? Because like the idea of moving money with an exchange, like a lot of companies, when I was at Coinbase, they started trying to do that, where they would use the exchange for like a payment service provider or merchant acceptance platform. And that is technically possible, but like attributing payments and doing that is like, from a compliance effort, because that, it falls on the exchange or the Bitso, for example, because they're the regulated entity that's in the flow of funds. So I can see why that would have been a difficult. What was the use case for that payment? Why were you accepting USDC?
I think someone was paying out a developer in Mexico. And so that was just like, hey, let's pay them out in MX and pesos. Can we use USDC as the intermediary to make a payment rail? So I think the weirdest thing was actually at the time, like trying to explain to Bitso why we wanted to do this, right? Like we're like, hey, can we just use your SPAY connection, to pay out in MX and pesos locally? It was not the time. So we went
and now like, fast forward 6 years, that's a massive business for them. Like this conversation.
Yeah, literally. But you know what they say? It's like it's literally possible to be too early in a market. I do wonder though, like if we would have stuck with it, and just like really gave it a strong effort, would we have built traction, and what would it look like? I still think like 2020 would have probably been the better year to start that versus like 2018, like that 2-year difference. But
okay, so that sounded like kind of a random or like one-off use case. But so since then, for the company, what has been typically, if I were to randomly select a client or a merchant that's using your platform historically, what would they be coming to you guys to do? What's the typical merchant use case you're selling into?
Yeah, so we sell mostly to platforms, marketplaces, and fintechs. They use us to hook into global payment infrastructure and multi-currency wallet infrastructure. So we don't necessarily service in merchants directly. We service the platforms who service the end merchants. Now, the types of use cases that we see, it's funny, like specifically with USDC, it seems as if in LatAm, across Africa, USDC has become a preferred method of getting money sort of either out of those countries or into those countries, and having like a multi-currency wallet in some areas becomes really beneficial because, theoretically you can on-ramp it. We're not on-ramping right now, so I do need to make that clear to any partners that are listening to this podcast. But yeah, so does that make sense? So merchants that you see, e-commerce, import, export, supply chain things, very sort of stereotypical vanilla use cases that you would see in B2B payments. Creator payouts, payroll specifically is really big. Yeah. Nothing.
Do you have any, for those listening wanting to wrap their heads around this, and I'll probably be asking you a lot of like very high level, simple questions, because for this show specifically, I really want to help make stablecoins just dumb simple for people who maybe just entering this conversation for the first time, and really help them understand why and how stablecoins are being used within these types of payment flows. So do you have maybe whether it is a cross-border marketplace, payroll, just a company, a public example or a case study that you guys lean on when explaining this type of thing that the listeners might be aware of?
I have a really fun example. So we came across a payroll use case. I can give a few examples, but we came across this payroll use case. They're using us for real-time fiat payroll, but the bread and butter of their business that got started was servicing Web3 companies that were doing payouts to engineers. In the Web3 world, it's very common to use a pseudonym or to be anonymous, right, to your employer. Just like that's the culture of that world. And so this company shined because they helped employees stay anonymous. They would know who the employee was, but the company that was employing the employee actually had no idea who it was. And so to get going, that's sort of, obviously these developers wanted to be paid in some form of stable coin or cryptocurrency. But I think most of it was like stable USDC. Surprisingly, I think USDT is much more adopted and more preferred, especially in Latin America. But yeah, so that was the first one, right? It's just like normal payroll. You have a developer in Argentina and he wants to be paid in USDT or USDC. Why? Because he can control the exchange rate, right? So he gets a wallet, he can hold USDC. He doesn't have to worry about having a US dollar account. And then he can figure out how to cash out that USDC on a local Argentinian exchange to get Argentinian pesos. I don't know. It's about as simple as it gets.
Yeah. Those
Break it down
who
further?
haven't, no, this is great. Those who haven't worked in crypto, they might be hearing that and be like, what the hell? That sounds so sketchy.
That was the sketch, like sort of like I couldn't believe it when I heard it use case.
But if you work in this space, you're familiar with these types of people who this is like a core priority to how they think about the world. And you join meetings where they they won't show their face, and they like, I've been on these calls and there is a subsect of like the industry of people who are incredibly talented, who I'm assuming most of them probably are doing very legit business things. They just really care about privacy and they don't want their identities to be shown. I don't, it's sort of, I guess, to get a little spicy here, I'm curious how when you think about the responsibility of that or the position you have in that. I know, going back to the exchange dilemma, like for an exchange or the party who's regulated in moving this money around. Someone is, if you're, transmitting value or transferring value on behalf of people, there comes typically with a lot of regulatory and compliance burdens and
Sure.
guardrails that you have to abide by. In the journey in the last 6-ish years, as you've started and built this company, you're kind of playing in the space of facilitating money or moving money or being a tech provider. Like, how do you guys think of yourself in that sort of conversation? I'm sure you're running into and thinking about a lot of that.
You're gonna have to reword that for me.
Do you guys at RouteFusion, do you think of yourself as a like money transmission business? Do you think of yourself as a tech provider? Are you ever like custodying assets on behalf of people? Like, what does that look like?
Yeah, so for us, we are not an MSB. We do not have any money transmission licenses. We simply think of ourselves as a tech layer. So the value that customers get when they come to RouteFusion is that we built a network of different payment providers, liquidity providers, and banks around the world. So if you come into us, you get built-in redundancy, you get access to a lot of different compliance and risk. How would I word that? You get access to a bunch of different companies that have different levels of risk tolerance that can be beneficial because maybe you want to work on sorry, my wife just came to the door, distracted me. You can, you get access to, I don't know, let's say you had a use case that was this Web3 payroll that I was talking about, and then you had another use case that was online gaming payouts for like Xbox tournaments or PlayStation tournaments. Very legit, but could be deemed as risky because it's online and gaming. We can effectively service all of these different industries through the different providers that we've built in our network. Whereas like if you do this yourself, you're effectively hindered by your risk and compliance policies or your partner's risk and compliance policies. And so over time, you end up having to build out this network so that you can service all of these different businesses. And so when people come to RouteFusion, they get access to all of these really cool pre-built things in one package. So yeah, we don't, I mean, maybe someday we'll get licensing. It's not the top of it's really not top of our priority right now. Now, a lot of our customers have licensing. And a lot of our customers are MSBs. They have money transmission licenses. They are payment providers and that sort of thing. And it works well having that too.
Yeah. So it sounds like the network of people, like liquidity providers, local financial institutions, this idea of redundancy. I feel like every call that I've been in for the client that I'm servicing right now on the go-to-market side, when we're talking to their clients, this idea of redundancy is like really top of mind right now.
It's huge.
Why do you find that is such a, like right now in the world of global payments, especially on-chain payments, like tell us more about why that's important.
I think it all started with Synapse. Senket is a friend of mine, so there's no hopefully I'm not.
For those not familiar with what happened there, can you give a little overview of that situation?
Yeah. So jog my memory here, but basically Synapse was a banking as a service provider. One of the original ones that started it all. They had quite a lot of companies using them. So pretty much at one point, I would say almost every neobank or fintech in the US at one point was probably leveraged through Synapse. They ended up going bankrupt, and there's just been this ongoing sort of like craziness around how to sort out user funds. But when that happened, there were a lot of fintechs that were affected by it that were immediately shut down day of. And so because of that, fintech founders, CEOs, product people, more specifically boards, right? Like they all became very hypersensitive to the idea that this could happen at any time. Funny enough, though, in payments, this is a very common occurrence, right? Like this is a very normal thing where take someone like Currency Cloud, for example. Every year, they're required by their banks, specifically Barclays in this instance. I think Barclays and I can't think of the other bank name. Anyways, they're required to offload like 10% of the riskiest companies that transact through them. And so it's always just been a good idea in payments and cross-border payments to have redundant solutions. So if for some reason you got turned off, or if for some reason, a payment wasn't accepted, you could reroute it. And so, yeah, but I think for fintech and everybody else, redundancy, when Synapse happened, that was the big aha moment for like, wow, this is really a value prop.
Yeah.
Which was cool for us. We'd been selling it as like, hey, you're going to want redundancy. And then when that happened, like, oh my gosh, it was like, wow, we really, it was like we weren't lying to people is what it felt like, like we're like, no, redundancy is really important.
Yeah. I mean, you imagine a world where a lot of these financial technology apps that a lot of us use and love and make the user experience of moving and transitioning, transferring money to our friends, family, people around the world, a lot of them are using, they themselves aren't banks. They are just wrapping an underlying bank. And that's what we sort of mean when we say banking as a service. And so you have a super big vulnerability if you have, someone like Synapse who's in that position and they choose to go down. You then have this incredible like house of cards effect that comes crashing down.
House of cards.
When was this? This was like pretty recent, right? Like earlier this year.
Yeah, it was earlier this year. It's been wild. And then I don't know, for your listeners, like if you want to learn more about it, he'll tell you he doesn't know what to call himself either. He's not a reporter, he's like a finfluencer, if you will. Jason McCullough. Follow him on like Twitter or LinkedIn and you can read all about the drama there. It's fun.
Okay. And how would you, I mean, another episode, it seems like every episode I'm on this season, someone's bringing up Dakota and Ryan's business from Dakota, which would be the on-chain version of that, which would be in my opinion, I think in Ryan's opinion, what he shared on his episode is like, when you actually build the rails for a banking system or who you choose to bank with, if you build it on chain, all of that counterparty risk in some ways can go away because there's a complete transparent look at where the assets are held, how they're secured. There's not 100%. This sense of like question of like where the money is, who's holding it, what's the risk appetite. If you use something on chain, there's a lot of that clarity there. Talk to us a little bit, as you guys have evolved and are thinking about the future of this business. It sounds like the first couple of years of the journey, you were building this real-time payments system, building a lot of the partnerships in more of a traditional stack where you were working with non-crypto, non-Web3 forward counterparties. How are you thinking about the future now? I think a lot of businesses are in that position where maybe they've built a traditional payment stack and they have companies or customers that are like, hey, what is my stablecoin strategy? Like, how are you thinking about that?
Yeah. So I'll give you the spin, right? So I mean, we've always been bullish on crypto. We've always been bullish on stablecoin from day one. It's just that we thought we should go after the fiat and then we can, hopefully when compliance teams come around or banks come around, hey, it'll be our time to sort of like step into the world of stable or crypto. And so one of the ways in which we did that this past year was focused on being the adjacent payment rails to stablecoin payout companies, right? So they were paying out in stablecoin and we said, hey, why don't you pay out in fiat as well, right? And that got us in the door with a handful of these companies where we were doing their more traditional rails while they still had a huge segment that was doing stable. And recently being able to fund these global payment rails with USDC, the way that you should think about it, right? This is coming from like bank level compliance, right? Took a very long time to get this through, but the way that you think of it, let's take stable out of it. Let's take crypto out of it. And let's just look at the benefits to what it gives our customers, which is 24/7 funding of transactions, 365 days a week, real time, instant. That's it, right? Like if you take everything else out of it, that's how you sell it across compliance. That's how you sell it across like, are you a business that does a lot of payouts? Wouldn't you like to be able to fund those transactions on a Saturday? I don't know why people would do it on a Saturday, but let's say you're funding it on a Saturday at 8 a.m. before your kid's soccer game, and you have the payout go out before you leave the door, and it's in your customer's bank account or your employee's bank account in native fiat currency, or I mean, it could be in a stable USDC wallet, whatever they choose they want. I think that in and of itself is the biggest benefit to corporate treasurers, to people that are trying to figure out like what's the real benefit of stablecoins. It's that merge of the two worlds, right? It's an intermediary that can be extraordinarily useful.
Yeah. the math here is going to be pretty estimated, but if you just take the weekends and you include that, that's like 30% of the week almost.
That's
and then
crazy.
you think about the time that the stock market or the global markets are up and running.
Sure.
That's half the day.
Yeah.
Roughly. So then you're actually looking at this alternative where it's actually unlocking, like I would probably look at the math, like over 50% of time that you just get back. Like you're almost doubling the amount of time in the week that you can actually move money.
Look at it from this perspective, right? And for people that like I'm sure Drew and I have, like, when we talk about this, I'm sure Drew, you like have this like very vivid sort of like experience that you've dealt with like global payments at some form or fashion that's like driving that. That's like real world example is, okay, I run a multinational corporation. I have offices in the US. I have offices in Singapore. I have offices in the UK. I don't know. We're just making shit up. But banking hours 9 to 5. Right? Payments processed 9 to 5 in the US. Well, what if I need a payment to get to Singapore and I fucking missed the cutoff? I'm screwed, right? Like I'm screwed. There's nothing I can do. That wire will not get processed until the next day. That's just how the traditional banking rails work. USDC, doesn't matter. Send it at 12 o'clock at night. I can send it 24/7. I can get that payment to Singapore instantly. Yep. Literally, stablecoins completely remove borders, right? It's the only real-time borderless transaction thing that we have, currency, whatever you want to call it, that we have, intermediary of value that we have in the entire world. It's silly that it's taken this long for it to, it's still not even like that. I think I read something. I put this in our board deck. Since 2021, stablecoin adoption has grown 85% year over year. That, like, it's the fastest growing payment rail in the entire world for a reason. And the most beautiful thing about it is all of it's global, right? Like it's meant to be for global payments. Like that's what it's meant to be used for.
You said 85+% year over year
85%. Yeah. I mean, like I did some very shitty math to get this number. I looked at coin market cap to see like the, growth rate.
You're already, but you're right. I mean, but the point is like, yeah, the adoption of this asset class and type of payment system is exploding, and it still feels not that popular, relatively speaking. Like this is still something that feels very nascent.
Yeah.
Most of the massive companies that are moving money around the world are not doing this yet, at least in this form. But I do think a lot of companies are leaning in and they're looking around the corner and asking like, what does this look like? Mm-hmm. Which was a huge reason we wanted to start this brand and the show and have a channel for people who might be asking those questions. And I mean, wanting to move money in that sense, information over the internet works. If you're in a different country and the stock market is closed, imagine if you can't like send a text message or email. It's like, that would just be preposterous. The internet
it's insane.
Yeah. But that's for still the majority of multinational corporations or the global economy. That's how money works because it's stuck in these government-based systems. So tell us, let's transition to the future and how you're thinking about it. You mentioned like you found some interesting, product resonance with Web3 native companies who actually now need fiat access. So companies that are already bought in on the stablecoin pitch and they're like, we might have that covered, but what you guys have been doing with fiat for the last 6 years is really, really popular and attractive. What would you say now, as you look forward, is the pool that you want to swim in and the kind of business that you want to carve out in the world of stablecoins?
So the way that I look at it, just because I have to be responsible, right? If I could do it my way, tomorrow I would be a fully, stable native business that has all my MTLs, and I would be, selling into corporate treasuries and letting them know the benefits of, stable coins. And don't worry, you don't even have to know that it's, USDC. I'm doing all of this in the background and you just get real-time money movement instantly all over the world. We're not there.
What feels, because there are people doing that, or people that think of the world that way. What feels for you?
So for me,
what's getting in the way?
So, well, I don't know that there's anything getting in the way. I think like I have a company that has existing revenues, that has existing business. So for me to, take us off on that tangent, there has to be like good reason. And so the way that we view stablecoins, I actually view it a lot different than a lot of other people. So I say a lot of other people, a lot different than what we've been speaking about, right? I look at it as stablecoins, they really unlocked the value over the past few years for people in countries that experience high inflation, not because stablecoins were really fast payment rails, but because you could have store of value. And it was the closest thing to a US dollar bank account that people could get, right? They didn't have to onboard with TransferWise or AirWallets or whoever to get a US dollar account. They could just go on chain, create a USDC wallet, and begin getting payouts into that USDC wallet. So it was really more of a store of value wallet bank account than it was anything else. And so when I look at it like that, I see our business as focusing heavily on how can I enable people that are not in the US? How can I enable them to open a bank account in the US as easy as possible that is also stablecoin friendly, right? So that you have the ability to, a business owner in Nigeria, an import exporter in Colombia can have a US dollar account in the US, receive fiat currency, or could receive USDC, right? Like you have both options. And so for us, when we look at it like that, we say, well, even if stablecoin goes away, which it's not, but even if it does, like the demand for non-resident US dollar accounts is always going to be high. The key there is how do I marry the two together? And so that's the future for us is enabling more of this infrastructure that is stablecoin friendly. And we started off with basically like, hey, companies can now fund these 65 real-time global payment rails with USDC. And that's the beginning.
Yeah. So you have, a company that works with RouteFusion to maybe they want to have, maybe that's what they want to do. Maybe there's a company that wants to have a platform that simply allows for their users to open US dollar accounts. And maybe they just want to do that in a specific country in Latin America. And they just want to be like the best US dollar fintech for Colombia or something.
Sure.
They would, from what you're saying, they could go to your business and the sort of network of financial providers that you've assembled and be able to build a business on top of this to give, for example, dollar access or virtual accounts to their customers or their users. Is that sort of how you're thinking about it?
Yeah. And then the USDC, having it be enabled is like, or the stablecoin, USDC, USDT. I just personally really like USDC. There was a time when there was bad news about USDT or like that it was like kind of a shady thing. It's not. Apparently it's totally fine. But I just think that USDC is supported by better organizations. Yeah, and all of these accounts should be ultimately stablecoin friendly, meaning I should be able to go from that bank account into USDC. And if that user wants to receive payment back to a USDC wallet, they can. If that user wants to receive payment back into a local Naira account, they can, right? I think the next iteration of that is like Spend. And there's some cool companies like Rain that will allow you to actually spend stablecoin on a physical card, which is, that's game changing.
Yeah, Rain's great. Yeah. So unpack maybe when you're thinking about exactly what you just started talking about, like the partners and the people that you would need to assemble on your side, aggregate on your side, work with, integrate, whatever you want to think about it as. You have Rain on the card side for spending. What other partners or stablecoin friendly companies are top of mind for you to be able to do what we just talked about in like a local jurisdiction in LatAm?
So I think like, I think I'll say this, like there is a company called like Hi-Fi Bridge. Everyone obviously knows Bridge that just got acquired, right? And I think like, what Hi-Fi did is they're leveraging, they're building out their own networks with people in these different regions to make the payouts in local currency and settle with USDC. So, okay, let me back up here. There's a couple different ways that you can go about it.
Zach Walsh is going to be listening to this part, so make sure you get this right.
Tell Zach tell Zach to sign our contract already.
All right, Zach. Well, it's all riding on this moment. So let's see. Why would you want to use Hi-Fi Bridge?
No, so I'm gonna reverse out. Hi-Fi Bridge is an awesome company, but I'm gonna split this out a little bit more, where it's like, how do you build out some of this infrastructure? We launched 2 years ago a thing called Project Stable, where we mapped this all out, and we're like, hey, in case we do ever want to get into this, how would we do it? Who would we use? And one of the really cool things about the stable community or the crypto community is they just want to help people. And so we went to our friends at Stellar. For people that may not know, like, Stellar is a cryptocurrency that is focused on real-time payments. It's like a competitor to Ripple XRP, which I'm sure everyone has heard of. And the guys at Stellar, they have been for years, and the same guys at XRP, they have been building a network of banks around the world that will take stable as settlement. And they just want people to use their network, right? Like, that's their whole thing. And so through them, we get lots of it. You go down that path. You get lots of introductions, and one introduction leads to another. And then that's how you effectively form a network. So, like, to call out specific vendors other than like people like I just named, like Hi-Fi or Rain, both of which, like, I like the founders a lot. We're friends. Farouk is something else. He's an animal. I'm sure you know.
We got to get the Rain team on here. That's a good idea.
I'll tell him to get on. I'll say you really should. Those guys are doing some really cool things, and they're extremely creative in how they have approached everything. But yeah, so anyways, without naming specific vendors, I think it's like, look, you look at almost like the open source initiative to build out your network, and then you can build out all of these local payout methods, right? Like, I can get a bank in Bolivia that is on the Stellar network that will accept USDC, and they will pay out in local Bolivian currency, and I can negotiate a rate with them and stuff like that. And then eventually, if you really want to get crazy, it's like, well, where do you get the liquidity? And that's when market makers come in, and we don't want to go down that route. But yeah, does that help sort of answer that question?
Yeah. There's a lot that needs to be, especially when you get really down to the local jurisdiction by jurisdiction connectivity. It's some of the, we've had Borderless on this season. We've had Aaron. Just this morning, I recorded my episode with Max.
I just talked to Max like 2 days ago.
Yeah, a lot of people are in this world where they're fighting that fight, and they're waving that flag to, like, do the work of, whether it's through like an aggregation or orchestration model of finding the Hi-Fi is a great example. There's a lot of really awesome innovation going on in that part of the stablecoin stack, if you will, because at the end of the day, like, right now, people, companies, institutions that want to use this stuff, in my view, real draw is the settlement and the speed and the dollar access for at least the users. But there's still this huge priority around coming on and coming off. And like, if you can't really make the onboarding or on-ramp into stablecoins, and then the offboarding or off-ramping out of stablecoins into local fiat currencies, you're not gonna adopt this. It's gonna be something that continues to,
And that's and then to your point, like, that's where you have to view. I mean, you don't have to. I do. I choose to view the world as it's two worlds, right? And how do we make both worlds happy? I will say, though, it would be such a beautiful thing if everyone just transacted with Stable on your phone. You had cards hooked up to your phone, right? You could transact. I mean, that's effectively what Rain's enabling, and it'll never hit mass adoption until we actually get a government that adopts a true stablecoin. Maybe with our new administration, like, stablecoins become a thing, USDC becomes a thing, not like I don't think anyone wants a actual US dollar token issued by the federal government, but something like USDC would be really cool. I'm sure
it's been an interesting journey for us as we stand up this T and corporation, Stable Studios, the business. And for us, it's like, what is our payment stack going to be? How are we going to accept our client retainer fees? And like, for example, at least right now, and I know they're working on this, but like Dakota, we can have our kind of treasury management system there, but right now there's no sort of spending access. And so for me, as I'm operating the business, you got to hit up Rain. And there's there's enough pieces and like kind of components to the recipe that are starting to pop up and bubble up that I do think that we're not there yet, but we are nearing a point where whether you're a retail user or a business, you can actually keep the money and function with the money remaining on chain without having to kind of hop in and hop out, which
I
at
think
least
we're
right
close.
now, like I'm waiting my Southwest credit card approval, and I'm still having to kind of go into the traditional world of things. But yeah, hopefully we're nearing a point where companies can actually just keep these assets on chain, which is going to make everything so much faster, cheaper, better.
I ask everyone all the time, like I'm like, do you accept Bitcoin? Can I pay you in state? Like, can I just send you money to your Coinbase wallet? And it's the adoption and at the consumer level is in the US, there's no reason to have the adoption. That's why stablecoin is so important globally though, because we have US dollars. But guess what? No one else has US dollars. Like it's very difficult. It's very easy for the large companies in these countries to get US dollars, but like it's not easy for, an SMB that does $1 million to $20 million a year in business, which you may think, oh, SMB, 20 million a year in business, like they might have small margins or whatever, but like it's not easy. And so I know for a fact, like we experience that here, but like if you go to Argentina, like it's pretty common. It's like transact either Bitcoin or USDC. I think that's one of the coolest things about it actually is that it's, we'll figure it out. I mean, more people will get on chain in the US.
Yeah. It's interesting. I mean, for me, I'm a huge Bitcoin person, but I'm not gonna spend my Bitcoin. That's not really what I'm gonna do. I'm gonna hold it and probably, give one to each of my children or something like as a, hey, take this instead of a college tuition or something.
Here's some Satoshis.
Yeah. But yeah, that's, I sort of like to differentiate because historically in order to transact on chain, you've had to use naturally fluctuating or speculative assets, which isn't always a bad idea, but like it just creates a lot of complexities in my view around accounting and settlement and the times of wait times of blockchain confirmations and things like that. Like stable coins in the world of payments specifically seems like we're in a really, really interesting moment of what that can start to unlock.
I think one of the interesting things with stable coins is that you are about to have, like, it's not just USDC or USDT, like people are just creating stable coins for business use cases. So like one of the things that we're joking around, as I say joking, like it's, I was up till like 12 o'clock at night texting back and forth with my head of infrastructure. And we're joking like, hey, we need to create like fused FUSD, right? And why do we do that? Well, when maybe it's like for every payment that someone sends, maybe we issue them one FUSD, or maybe we mint them an NFT to give them like, it sounds silly, but like over time, it's like almost like the gamification of payments, the gamification of interacting with your company, right? And I know I'm not the first one to talk about this. There's people that are way smarter about this stuff than I am. I just think it's a really thought-provoking idea to think about. We're barely scratching the surface of like the use cases for stable. Like I think it goes way outside of just like payments. It goes into new rewards programs. It goes into all sorts of different things, loyalty, stuff like that. I don't know. We don't.
This is good. This is good. Are you, as you guys actively explore options in this area? I mean, we're sort of cheeking this, but like this is a huge deal, and a lot of companies are, especially companies that have payment networks that they can start to, like Dakota, again, for example, is very bold and loud about the idea that you pipe money into the platform from a treasury standpoint. They're going and they're minting and issuing through Bridge this Dakota-backed stablecoin, which is for them a core revenue. That's like the primary way that they're making money.
You could source your own liquidity. There's just so many like crazy.
So what would that look like as you guys think about in around the flow of funds and being a payments company, like partner or company issuer or something? Like how would you try to achieve that?
I mean, you can partner away. I cannot name the partner that I'm going to use because I don't want anyone else talking to them.
You guys have, it sounds like, okay, so this is not just like a whiteboard. You're doing this.
Yeah, we've talked it through. Yeah.
Cool.
I will say though that like, I don't know if you have any technical ability, like you can get onto ChatGPT or Claude or whatever. And, I'm deploying Colton coin which is a stablecoin smart contract on Ethereum, and I'm going to issue 1 billion coins, right? And like, as just like a thought experiment, it's not hard to do. That's the other thing that I think people have to understand is creating a stablecoin, doing these things is very easy to do. Like, especially with AI now, it is the most simple thing that you could possibly do. It's just like writing code. And there's so much boilerplate, right? Like, okay, example, USDC, right? USDC, if we had to get technical, is just a smart contract on the Ethereum blockchain, right? That's all it is. The code for USDC is public. You can go copy that code, change it to Drew Rogers DC, right? And deploy it on as a smart contract on the Ethereum network. And now Drew Rogers, coin is created. And I think that's like,
but
there's no liquidity behind it.
You have, sure. That's the difficulty, right? Like, you can go make 1 billion Colton coin, but you have to have, that's why Circle or Tether or whatever, like, that's why they have become so
100%.
Really Circle, in my view, like the 1-to-1 backing, the trust in the system, like,
without a doubt,
the interoperability of like how that. So how do you?
I think the point that I'm trying to make though is that, like, for people especially that are like trying to understand stablecoin, right? Like, there's a bunch of use cases. It's not a massive hurdle to get into it if you decide that you want to build a loyalty program. So for every dollar spent on, your Nordstrom's card, you get a Nord's DC, a Nord's buck, right? It's the same shit that's always been happening, except now it's on chain. It's visible. Everything is all the benefits of blockchain, let's say. That's very easy to do. Now, granted, I don't think, you talk to the actual guys that really know this stuff, and they'll tell you, like, you can do it. It is a rabbit hole, but that's where people like Bridge come in. That's where people like Rain come in that help you, that have already done all of this, and they help you make spinning up your own coin or whatever a lot easier. They take care of all of the, what I would say, like, hard stuff. So that's kind of my point, is that it shouldn't be this thing that's like this mystique. It's a very simple thing in reality.
It's a value system. It's Starbucks rewards points. It's coupon. I remember growing up, what my mom would do is, I don't know if you remember these things, but you would buy like a $50 buzz book, I think is what we called it.
Yeah, they would sell
remember
the
those
books.
Things?
Yeah, dude, those things are sick.
And you would just like, my mom would have one of these massive books in her car, and like anywhere we'd go, she'd just be sifting through the massive, like, the double Bible of like all these things.
What happened to those? Do you think they still exist?
Completely antiquated. I mean,
I know, but do they exist? Like, that was like the
not.
PTA would sell them, right? Or like the football team would sell them. Like,
yeah.
I mean, I haven't even thought about that in years. It's so fun.
Yeah, it's just like a value system arbitrage, and that's what we grew up on, was the buzz book coupons. But I think rewards, to be honest, my opinion, I haven't seen a lot of the stablecoin backed reward systems really take off yet.
No, I haven't either.
Also, not financial advice, but there's a ton of complexity that comes into the mix when you start to have something like a point system be interoperable or transfer in and out and start to be like converted to actual dollars, for example. That becomes like different than like a point ledger that can't be a lot there. But I'm a huge. I'll have to, after we stop recording, I'm curious to know more about this issuer or whoever you're working with, because it's a big deal. I think people are sleeping on business model, because a lot of people in your shoes are going to be thinking this way.
Yeah. Well, I think so, and that's what we hope to capitalize on in 2025. We'll see what happens. Or, like I said on my LinkedIn, we're stable curious.
Yeah, I think I saw that yesterday. I was like, all right, I got to reach out to this guy. This is interesting. Well, this has been fun, Colton. For the last, things that are personally, stablecoin wise, RouteFusion wise, you want to leave with the audience before we go?
Man, put the pressure on. No, I mean, look, I think stablecoins, I think they're beginning to have their time. I think that with this new administration, there's a lot to be proven, and it's gonna be a fun 4 years. I just hope that we're just kidding. We're not gonna be wrong. Stablecoins are the future.
You're instilling doubt right at the end, and then we're gonna part ways with you.
That was the joke. No, like, look, if you're listening to this and you've never dealt with it, get onto Coinbase. I mean, it takes like 5 minutes to set up an account. Link your debit card or your bank account, whatever. Get some USD coin. Go to your wife or your friend or spouse, or whatever, and like do the same on them, and then do a transaction between the two. Right? Just like see it. I think that's like the most practical thing. And then be like, whoa, like I could just do this all the time, like just move value at all times instantly.
I think people are so used to that in the US with platforms like
Venmo,
Cash App and Venmo, right? Because, oh yeah, money just feels like this.
Yeah.
What we don't realize is like that's just a business's ledger.
Yeah.
Which feels like incredibly frictionless and great, but like that doesn't exist outside of Venmo, PayPal wall globally for most people. But like we've, I think, been so, I don't know, like there's definitely a sense of privilege in that, I think, of what we've been used to versus, you know, the person in Argentina who just wants dollar access. Like very different situation.
It's very, very different. Very different. Yeah.
Absolutely.
Yeah.
This is a great conversation. Have to do it again, and there's a lot more to talk about. So we'll have a part 2 to this for sure.